XRP ETF price dump explained. And during today's episode, we're going to show our community how over $250 million came into XRP on Thursday, which led to an 8% drop in the price chart. With many content creators predicting major price appreciation after these ETF launches, we're going to provide a dose of reality for our community, showing our listeners the exact number of inflows that XRP needs to hit before we begin to see some serious momentum in the XRP price chart. We're also going to talk about how the death of the 4-year cycle may already be upon us. With Amazon's price chart drawing correlation to what we're seeing with XRP, could we be looking at an asset that's ready to appreciate over the next 5 or 10 years? Hello and welcome back to another episode of Good Evening Crypto, your favorite crypto news related channel. If you enjoy this content, smash that like button and subscribe, as you're going to get an update every single day, 5:30 p.m. Eastern time. And to kick off today's episode, I wanted to dive into the ETF results that we saw on the Nasdaq earlier this week. With the first ever XRP spot product going live, we saw a breaking record of $245 million worth of inflows and nearly $60 million worth of daily volume. Now, if you've been waiting for an XRP ETF and you were excited that the moment is here, smash that like button. If you're disappointed, leave a comment underneath the video, because during today's episode, we're going to track the inflows and we're going to show you how, if we can reach a certain number, XRP's price chart will begin to outperform. But $245 million is not going to be nearly enough to move the XRP price chart. But what's great about this for the XRP community is that Canary Capital, which did set a record for their inflows, was the smallest ETF issuer on the entire list. The next company that's scheduled to have an XRP ETF launch in 2025, that would be Bitwise, valued at $5 billion, which is over 30 times the value of Canary Capital. Now, even more importantly, it's not just 1 or 2 products that are really going to move the market. We need a half dozen of these products to be live at the same time to really reach the inflow predictions that we're going to highlight later on in the episode. And some people have a misconception that inflows mean asset off the open market. That's not exactly what's happening here. We need pressure on the order books to see the XRP price rise, and the ETFs, with only 250 million, we may need 10 or 15 times that number before we see some serious price appreciation. But Johnny, what's your reaction to the initial inflows and the fact that all these other companies going live, this could really create some demand?
Absolutely, Abs. Just going back, we've always thought going into this that these were all going to kind of happen around the same time, and we get this massive daily info. We've talked about that consistently on the show. Everybody's forgotten that. What we said was, if all the volume came in around the same time, which is what we thought months ago, that we would expect a price appreciation. I'm still sticking to that if that happens, but that did not happen, and people aren't listening. So guys, what we're trying to tell you is, look, if the volume inflows are going to be very small, like 245 million, in the grand scheme of $138 billion market cap, that's like less than 1%. It's so tiny. It's not going to move the needle. We're going to need something much higher than that to start pushing the price up. And that's what we're trying to tell you guys, is be mindful of that, Abs. I think we've done some research and we got some numbers we're going to share with you, but we know at the end of the day, it's going to take into the billions to be able to start moving that needle into the price points that people want to see, Abs. And we're just not there yet. We're going to need all these things to line up at the same time for that to happen.
And to go through some of the data and analytics, guys, we're going to dive right into that at the beginning of today's episode. If you enjoy this content, smash that like button and let us know, what is your 2025 peak price projection for XRP? Looking at the XRP price chart, we are getting a bullish divergence in the RSI. Now, what does this mean? The relative strength index tells us, is there too much selling or is there too much buying going on? Well, it appears that sellers are in control, but typically when we hit the bottom of this range, we will see a reversal in momentum. If XRP can begin to get daily closures above $2.68, we will officially be out of this bearish frame that we've been in for several months, and we can start to talk about the bullish price targets that many of our listeners are waiting for. Now, how can we get there? We need millions, if not billions of dollars worth of new demand from these ETF products in order to see some serious price appreciation. Now, here's the TLDR on the matter. There are 1.75 billion units of XRP on Binance, 1.65 on BitThumb, and 1.5 on Uphold. Now, those wallets hold all user deposits for each individual exchange, which correlates to about $2.8 billion because many of these exchanges use multiple wallets. What does that tell us, Johnny? There is about $5 billion, roughly, of US dollar value that's liquid for the XRP project. Now, that's about 2.4 billion tokens. We're correlating that to $5 billion. If we saw $5 billion worth of inflows, make no mistake about it, we would see an impact in the XRP price chart. So for people out there saying, What are the numbers that are obvious? If we see $10 billion or $5 billion in inflows, the XRP price chart mathematically will begin to perform. Now, what are we waiting for at a minimum? When you think about the OTC desk, that's where liquidity gets really deep. Nearly $12 billion exists in what you would call the deep liquidity float for OTCs. These XRP are available over the counter, but here's the problem. They have to pay a premium when they purchase these large quantities. Big misconception in the crypto market, Johnny, is that investors, when they're buying 100 million or 500 million units of XRP, they're getting that XRP at a discount. It turns out it's the exact inverse. Because if they went into the market and purchased $500 million, it would drive the price up 50, 60, 80%. They go over the counter and they pay a 5 to 15% markup instead. Now, the positive part about this, removing XRP from circulation, putting it in the hands of long-term holders. The downside, it does not affect the order books on exchanges. So I know you have a great answer to this, but I want our listeners to understand $5 billion in daily inflows would move the XRP price chart mathematically. $3 billion worth of inflows, as we're going to break down, would almost definitively move the chart dramatically. Again, maybe 50, 60, 70, 80 cents. If we don't break $1 billion worth of inflows for a single day, and this can't happen over a long period of time, these order books are going to be whitewashed, and we're not going to get that euphoric moment that we've been waiting for the XRP community. So chat, I would love to ask you, if you agree the ETS will pass $3 billion in demand, smash that like button. If you disagree, leave a comment underneath the video. And some context here, on day one, for the smallest XRP ETF issuer, we watched 100 million units come off the open market and move into the ETF. When Grayscale and Bitwise and Canary and Franklin Templeton all have products live in the United States, that number's not going to be 100 million. It probably won't even be 1 billion. It'll be far beyond that. And from that point forward, we can start talking about the impact in the XRP price chart. Johnny, what are your thoughts? Will we see 3 billion in demand?
First of all, you have a couple big benefits coming here. There's two ways that I'm looking at this market and seeing it happen with the ETFs piece of it. One is, the good news is they're buying, they're taking, and they're taking a lot of volume off the shelf. So you kind of get that lift. As long as users don't go and then sell their ETF, you're basically going to be creating a stable platform. So everybody should kind of view that as this is going to bring stability. Now, so that's benefit number one. Now, benefit number two, what everybody wants to know is, from a price prediction, why aren't these things going up? How do we drive the price up? Well, as we saw, guys, because we've got, $3 to $5 billion in liquidity on exchanges, and then you've got another, 5 up to 12 billion in OTC. There's a lot of volume that needs to get absorbed on the order books to drive it up. So that's the kind of research and homework we did here, guys, to bring to you guys, that we're probably looking at, you're going to need on the order of 1, 2, 3 billion just to start moving the needle. And then as we start moving the needle, we start to see how high it goes. Now, we got one data point, right? We got 245 million, and we didn't move the needle at all. So we know that's not enough. So we need to be somewhere, I would say we need to be somewhere between 1 to 3 billion. And maybe we're talking about a 40, 50%, 50 cents price move. Now, I know that isn't going to excite anybody, but guys, we're just being realistic. We're trying to tell you what we're learning, what we're seeing. We're adjusting as we're going too. And the reality is that's not a bad thing. If we're moving the price up and we're getting that volume, that two things are happening. One, you're getting price appreciation. Two, you're getting supply coming off the demand to kind of hold it so we have less volatility. So you asked me a question. Do I think it's going to happen? I think it depends on how these ETFs get launched. Now, we know there's a series to launch next week. The question is, do they all get launched on the same day? Do they get launched sequentially, one day after the other? If that happens, then it's going to be harder to achieve that. So I'm hoping we see some of the bigger players like the Franklin Templeton and the Bitwise. Would be great if those guys are launching on the same day, so we drive more of that volume and get to that. So when we see the schedule and we get a better sense of what's going, I can give you a better answer. But right now, I'm hoping we'll see that, but it's going to come out to how these things are launched timing-wise.
And guys, again, the number that we need to see is about $3 billion. If that occurs on a single day, we will definitively get price action for XRP. Now, I wanted to highlight how the market is changing before our very eyes as well. What we're looking at right here is the Bitcoin price chart, and many people are calling for a bear market right now. We've been promoting the inverse on our channel because the catalyst that we're looking at and how we believe they're going to impact the value of many of our favorite assets Oftentimes, it's much easier to be a pessimist, to be a bear, to call for the worst case scenario. It is much more difficult to be optimistic and realistic, but that is what we try to do here every single day on this channel. And what you're looking at is 10 years of data for the XRP price chart, starting all the way back in 2020 and finishing in the year 2030. Now, what this is a bear's nightmare. If somebody is calling for a bear market and they see this chart, they're going to say, you're absolutely wrong. Turn off that channel. We're advocating for the opposite. We believe that smart investors staring at this chart understand that this may be more likely than a bear market, and it's not like we've never seen this before. What we're looking at following, although these charts are almost exactly the same, is the Amazon price chart. And what do our listeners see? An all-time high, a bear market low, huge volatility, 40% drop in the chart. And from that point forward, it was steady price action up and to the right with some of these short 20, 30% corrections. But if you really look at the macro, there was not another bear market after 2003. And that's what I want our listeners to understand about digital assets overall. People are so focused on a $100,000 Bitcoin or even a $2.30 XRP. But I've showed you the correlation between the XRP chart and Amazon several times. And if XRP sees steady inflows, meaning, like you highlighted prior, a reduction in the volatility during a bear market, maybe some of these other projects drop 80%, 70%, but an asset like XRP only drops 30, 40%. That is a huge advantage. And although it may not be what people are rooting for, we want this blow off top. We want a 589. But what might be more realistic is that a reduction in volatility, but a steady increase in the asset's market cap could end up making many of our long-term listeners some of the wealthiest crypto investors on the planet. If you believe we are still in a bull market, smash that like button. If you think we're in a bear market, leave a comment underneath the video. I love to hear from our chat. And Phil from the EZA app makes a great comment about this. And Johnny, I think you're going to appreciate it as well. Phil stated, it's possible to have a loan that you never actually need to pay off because the crypto-backed loan could have no maturity. Now, let's say that crypto appreciates more than the interest you owe each year. You get to keep the crypto and live off the money you borrowed forever. Now, that doesn't happen in a market that's volatile like we've been through, where it's up 200% and down 75%. You need an asset like I showed with the Amazon chart that is steadily going up and to the right. And so when people ask me, what are institutions waiting for? They're waiting for digital asset price charts to look like this and then start taking advantage of them the same way they do in TradFi. If you enjoyed this content, smash that like button, subscribe to the channel, and let us know, guys, will XRP pass 3 billion in volume on a single day? We'll see you all in the next one. So if you're looking to do the same strategies that we implement here on Good Evening Crypto, I would advise everybody sign up for Merlin and click on the ITrust Capital link below. Now, why did these two ideas play off one another? Merlin is going to allow our listeners to understand where they should be taking profit in this market, and ITrust is going to allow our listeners to take that profit tax-free through an IRA product. Now, that's not the best part about this. We are giving new clients a $100 sign-up bonus using the promo code GEC9. So I would encourage everybody, click on the link below the video, use promo code GEC9, and set yourself up for success during this crypto bull market.